Kelli, we've got through 2020, 2021. Bull, bear, on the fence. Where do you sit?
I'm a bull. Two main reasons for that. Low interest rates and economic recovery. Low interest rates we're going to have for quite a long time, and that's supportive for valuations. And economic recovery, who would have thought that we would rebound from a global pandemic here in Australia, particularly the way we have. All of the economic indicators are at multi-year highs, or certainly very strongly recovering. So the combination of low interest rates and consumer sentiment at 10-year highs, business confidence strong, really good indicator for good, strong earnings growth next year. The equity market may end up not quite as high as earnings growth, but I still think there's plenty of upside for next year.
So could we get 15% on the upside?
I was thinking more 5 to 10.
Okay. Consensus trades, they happen everywhere and they normally bring us undone. Is there a consensus trade at the moment that people are going to trip over when we wander into 2021?
Well, the consensus trade is definitely sell the COVID winners and growth and buy the dirty value. And, you know, my experience with dirty value is that there's some pretty dirty value.
I thought it was deep value, but it's dirty value.
I prefer dirty value myself. And you can tell I've got a slight growth bias. So that's definitely been the consensus trade certainly in the last, since the vaccine news came out.
So go back to growth, do you think?
Quality growth is always a winner over the long term, in my view.
Okay, there's always something goes wrong. Can have great years, but there's that one stock that lingers in the portfolio.
Yeah.
There's something that gave you a headache during the year, and did you learn something from it?
When I look back, my biggest mistake was actually missing out on the incredible run that e-commerce stocks had, which I can't believe I did, because I am a shopper and I shop online all the time. My friends do as well, but I completely underestimated.
Your research was perfect, but your execution was poor.
Oh, terrible. Yeah, I was too finicky on my valuations and thought I was going to be too late to the party once they started running. And I missed out on a huge amount of upside, which was very frustrating.
Pick one of them. Which one would you
Temple and Webster I would have bought. Yeah, I just didn't foresee the huge spending on homewares and furniture and the operating leverage there. They really got it right. So
incredible stuff, wasn't it?
Yeah, it was.
Okay, well, here's something now you can dream a little. So put your nightcap on and have a snooze and think about the stock that you'd love to own if it was the right price. Someone like you who loves growth.
Yeah.
Is there a stock out there that's just too expensive that you could say, if it just gets down to that right price, I'd buy
there
with my ears pinned back?
There's one that is really high quality and always looks expensive. Fisher & Paykel Healthcare. I mean, that's a bottom drawer, steady grower, lots of global growth, but it's just trading at a particularly high multiple at the moment, given its earnings have been very elevated from COVID.
Terrific year.
And it's had a terrific year. But I think the thing that with Fisher & Paykel is that COVID has actually put the spotlight on just how useful and beneficial their products are, and how quickly it helps people breathe again and get out of hospital and save the hospital's money. And so I think their addressable market from here is going to be a lot bigger, and their growth trajectory is going to be a lot higher than what it would have been if COVID had never happened.
Well, you might get lucky. There might be a COVID cliff in the market's mind, and it goes down to that lower price you're after.
Indeed, yeah. It's got excellent management, great returns on invested capital, good cash flow generation, and a long-term global growth profile. So that's the sort of company I like.
Well, it's going to be even harder to pick this now, given you're so excited about the last stock.
Yes.
What's the stock that will perform for you in 2021 that you can share with us? What's your pick?
Well, I think that a stock that's going to be upgrading its earnings, and that the market is underappreciating how long its earnings will be elevated for, is Sonic Healthcare. They've already had the COVID boost from all the COVID testing that they've done, and they've been sold off a little bit recently since the vaccine news. But I think that longer term, as their underlying pathology volumes will recover. But also, I think people are underestimating just how long COVID testing has to go. Like, just because there's a vaccine doesn't mean that we're going to suddenly stop COVID testing. We've got Northern Hemisphere COVID rates going through the roof, and so I think there's going to be some upside there just in the short term. But longer term too, with antibody testing going forward, we don't know how long the vaccine lasts for. Like, does it last for 3 months, 6 months, a year? So I think there's potential for a huge growth in serology testing, where it's testing your immune system. Are you actually immune to COVID? Did the vaccine work for 6 months, 3 months, etc.? So I think that's another icing on the cake level of growth that Sonic is potentially going to enjoy, and it's got a lot of acquisition growth options as well. It's generating huge amounts of cash, excellent management, pays a nice little dividend around 4%, which is really hard to come by these days, as we know. So it's not the sexiest stock in the world, but I do think it'll do well for you in 21.
And it's funding those dirty value stocks at the moment, which has got to stop.
That's it.